Michael Burry. He's the guy from the movie The Big Short who predicted the last financial crisis in 2008. And the funny thing is, he's actually predicting another financial crisis in the short to medium term future. Michael Burry, he said, passive investments such as index funds and exchange traded funds are inflating stock and bond prices in a similar way that collateralized debt obligations did for subprime mortgages more than 10 years ago. When the massive inflows into passive vehicles reverse, it will be ugly, he said. He doesn't know exactly when it will be, but he does say, like most bubbles, the longer it goes on, the worse the crash will be. Now, what I want to do with this video is take a deeper dive into Michael Burry's portfolio. How has he prepared himself for this potential upcoming market crash? Okay, taking a deeper look into his portfolio, you can see that he only owns 10 stocks. So let's go over these 10 stocks that he owns, and remember, this does not include his short positions because he does not have to publicly disclose them. Anyway, let's get straight into his biggest stock position. So Michael Burry's largest stake is a stock some of you may have heard of before. It's called Taylor Brands. It makes up just over 13% of his portfolio. Burry has $12.7 million of the stock, and Burry has been buying big into Taylor Brands. His position has increased 40% from the previous quarter. So what is Taylor Brands? It's a US-based retail holdings company for various men's apparel stores. Okay, so it just owns a bunch of men's apparel stores in the United States. Very simple business model. Now, if you take a look at Taylor Brands' stock price over the past couple of years, it's been a sad story for the company. The stock's price has gone down 90% in 5 years' time. That is ridiculous. And this is just because they've been posting absolutely terrible numbers when it comes to their net income. Their profit over the past couple of years has been either negative or close to nothing, which obviously resulted in investors panicking and the stock's price shooting down. But this is where Michael Burry comes into the equation. He loves to buy stocks when they are cheap, when everyone else is panicking. He's a self-proclaimed value and opportunistic investor. And this is why he's bought so big into Taylor Brands recently. I mean, his position is up 40% from the previous quarter, and it's his number one stock position. Moving on to Burry's second largest position, making up a similar size to Taylor Brands of the portfolio, 12.43%. Burry owns $11.9 million in the stock, and its size is up 66% from the previous quarter. Western Digital is an American computer hard disk drive manufacturer and data storage company. So basically, it manufactures and sells hard disk drives and also products relating to storage, the likes of data center systems, cloud storage services, and other storage devices. Looking at the stock, it has been a crazy year for WDC. First, they dropped by 40%, then they went up by around 50%, then they dropped again, and now as of recently, they are up over 70%. This stock really is a swing trader's heaven and also a value investor's heaven if they can truly find the intrinsic value of the stock. Obviously, Michael Burry feels he knows the intrinsic value of the stock, which is why he's bought so much recently, and my guess is he's bought around this dip over here. It's a stock to look deeper into if it drops again. A very interesting choice of stock here. This is a stock that mines iron ore. Michael Burry's investing firm owns $11.7 million in Cleveland Cliffs, and it comes in at 12.27% of his overall portfolio. So, as I said before, Cleveland Cliffs is a firm that is based around iron ore. They mine it, they beneficiate it, and they pelletize it. Apparently, at least according to their website, they are building the future. But honestly, I feel like every company says that on their website these days. Now, probably the first thing that you'll notice when you take a look at Cleveland Cliffs stock is that PE ratio. The price is $7.26, the earnings is $3.94, which gives it a PE ratio of just 1.84. And okay, the reason why this PE ratio is so low is because these types of iron ore stocks, they're so volatile. Just take a look at their previous earnings per share. 2014 and 2015, the stock had negative earnings per share. Then in the years to come, it has been positive. But if we look to the future, it can be really hard to predict what is going to happen, which is why the price is so low. Either way, Michael Burry obviously feels he knows the stock well and that he can understand it, and that's why he's bought into it. This next stock in Burry's portfolio is a completely new position, and it now makes up 10.3% of his portfolio. He owns $9.8 million worth of FedEx stock. I'm sure a lot of you will know what FedEx does. They're obviously the courier delivery services company in the United States. As it says in Wikipedia, the company is known for its overnight shipping services and pioneering a system that could track packages and provide real-time updates on package location. It's basically your general delivery service company. As you can see, FedEx deliver an absolute ton of packages daily, and in 2019, it had an average of 6.2 million packages delivered daily. But the worry for FedEx is that package delivery seems to be slowing down and maturing. How are things going to play out with Amazon and UPS? Can they keep growing in the future? This is the big question when it comes to FedEx stock. If you haven't heard of this next stock owned by Michael Burry, then you might be a lost cause. This is one of, if not the most well-known company in the world, Google. You obviously use Google as a search engine, most of the time probably just to search up junk on the internet, and Google obviously gets paid for the ads that get shown to the billions of eyeballs that use their site. But, Google, or Alphabet, which is what the parent company is called, they own more than just Google. They obviously own YouTube, which is what you're watching this on. They own Android as well, and the Play Store. They own Google Cloud, Gmail. They own Waymo, the self-driving car company. Let's just say this, they're in a bunch of innovative, high-growth industries. And as I said before, Michael Burry considers himself an opportunistic investor, which is a big reason why he's not afraid to have 10.17% of his stock portfolio in Google. The thing is, in a market crash, we still need healthcare. Cardinal Health, as per the name, is a healthcare company, and it comes in at 9.85% of his stock portfolio. It's a completely new position for Michael Burry. And as I was trying to say before, the healthcare sector tends to perform better than most sectors in a crash. Even in a market crash, what you'll find is that pretty much all of the sectors are going to go down in price, but some will go down by less than others. The healthcare sector goes down by less than others because obviously humans still need their health taken care of. It does not matter what the stock market is doing. Alibaba, started by the great Chinese man Jack Ma, which he built into China's largest company. Now, Michael Burry has invested into Jack Ma's Alibaba. He has $8.4 million in the company, which comes in as 8.86% of his stock portfolio. Alibaba, it's a whole web of different companies. They've obviously got Taobao, Tmall, and AliExpress, which is all based around e-commerce. It's kind of like China's version of Amazon. They have Ant Financial, which is similar to that of the Western PayPal. It's an online payment system. They have Ali Cloud, which is like Google Cloud, and they own a certain percentage of China's version of Facebook, called Weibo. So if you own Alibaba, you're gonna be exposing yourself pretty well to China. Walt Disney, classic company. Burry owns 60,000 shares in this company. The market value is $8.3 million, and it makes up 8.76% of his portfolio. Disney is the media and entertainment company, obviously from the USA. You know, they've got their theme parks, very well-known attraction, very popular with tourists. They also have their TV channel for kids. And most importantly, they produce films. The likes of these films here are all made by Disney. You know, you've got a lot of classics from back in the day, and obviously you've got more modern big ones as well. And you know, they've obviously developing Disney Plus, which will compete against Netflix. So, you know, this company is a well-diversified United States company based in the entertainment sector, obviously owned by Burry. GreenSky, it's not your everyday well-known stock by any stretch of the imagination. I'll tell you more about GreenSky in a bit, but first, Burry has 7.71% of his stock portfolio in GreenSky, and he owns $7.3 million worth of it. So what is GreenSky? GreenSky is actually a lending platform, so they enable retailers, healthcare providers, and home contractors to offer loans to their customers. Very interesting business model, and you know, if you look at the stats, they have 17,000 active merchants, 2.6 million customers satisfied, and $19 billion of loans funded. So, you know, they're pretty big in the finance world, at least in the USA. Anyway, let's move on to our last stock. Sportsman's Warehouse. It makes up 6.31% of Burry's total stock portfolio, and this position is up 27% from the previous year. Basically what this business is it's an outdoor sporting goods retailer, and they obviously have more than one store. They can be found in 25 states across the United States. You know, if the sporting business is something that you're passionate about and that you can understand, I would recommend digging deeper into the stock. It's got some nice numbers attached to it, very low PE ratio of just 9.09, and the price has been pretty stagnant for a while, and Michael Burry has bought it. So, you know, there's a good chance that it is undervalued. Anyway, those are Burry's 10 stocks that he owns through his investment fund, Sion Asset Management. Now remember, not included are the short positions of Michael Burry, because he does not have to legally disclose his short positions. A little bit unfortunate, but what can you do about that? Either way, in these market conditions, Burry is still buying certain stocks. All 10 of these stocks, except Disney, are either new positions or increased positions. So Burry still finds value in certain areas of the stock market.